Hey guys, it's Simon, and I was asked on YouTube to do a video on how to set a stop loss on a call and a put for options on Thinkorswim. So that's what I'm doing now. I'm using the on-demand feature because I'd like to show you how it works completely from the time you set it until the time it actually stops out. Um, and I can't do that while it's nighttime and also the Friday night and while the market's closed. And on demand allows you to set stop losses. It won't allow you to do trailing stop losses, but it will allow you to do stop losses. So we're actually looking at Amazon, and I know exactly what this is going to do, so that's why I'm using this specific date. We're on November 26, 2018, so last year. Excuse me. And I went ahead and bought a put already, and it's this one here, which is the 1535 strike price, which cost 65.85. Or sorry, when I bought it was 64.88, and the underlying is trading at 1538 right now. So before we do this, I just want to show you. Right now we're at a 50-cent loss, and if you look at the actual trade price, this is what we bought the option for. So we bought the option for $64.88, which actually equates to $6,488 because the times 100. And then right now, even because it's trading at 1538, your mark is actually at 64.85, which is what the actual option is trading at presently. So you bought it at 64.88 and it's presently trading at 64.87.5, which is below what you bought it for. So you have a loss of 50 cents. Now the point I want to make here is this. When you buy a put, the price of the underlying has to go down in order for you to profit. And if the underlying goes up, you start losing money. So what happened was when you bought this, the underlying went up a little bit, and so your option lost some value. And the reason why this is important for what we're talking about is when you set a stop loss, which is what we're going to do right now, and you change. So I just right clicked and did a closing order, and then we hit stop. Now you have to put the stop at below what you paid for or below what it's trading at, because in order for this price to go down, the mark price to go down, the underlying has to go up. So your stop loss is still going to be below whatever the option is trading at. So let's go ahead and set this for something pretty tight, so that way we get stopped out pretty quick. And we'll do it for 64.50. So it's below what it's trading at, below what you paid for it, and it's just a standard stop. So I'm going to send this, and we're on pause right now, so it's not actually going to do anything. And then we're going to actually start. I'm actually going to go ahead and buy one too, and see if I can get this to fill while we're actually focused on the put side. So I'm actually gonna move this up a little bit so that way we can see a little better. I think you can actually scroll this up somehow. Maybe not. I thought you could. Here we go. A little bit easier to look at. So we're gonna go back to the chart. It shows where the stop is the red one. This is actually where I'm trying to buy a call, so you can just ignore that. But we're gonna go ahead and start this. And so this is actually going to go down at the beginning. And this is the reason why I picked this, because it does a pullback and then it starts going higher. So as it's going down, and this is going to take a little while to catch up because it's on demand. So as it's going down, the value of this premium is going to start to increase. And as this value of this premium increases, then you're going to start profiting. So this 64.87.5 will start going above what you paid for, which is 64.88. Now, like I said, it takes it takes about a minute or so to get it to catch up to where we're at. It's a lot of information downloading off a server. So I'm going to give it a couple minutes to show you the actual profit. And then once that happens, then I'm going to actually fast forward this, because it takes a while before we get to the point where I want to get to. So here The market change has been, sorry, you can just strike out what I was about to say there. I lost my train of thought. So here we go. So this is definitely in profit. It doesn't show it yet, but like I said, it will in a second once we get to the point where it catches up. It's a lot of information to download from this. Like here, we don't get any of the delta information. Most of the volumes aren't showing here. Like here, you see a little bit of it, but the important information, which is the bid and ask prices and things like that, are showing, and that's what's important. I'm actually going to see if I can cancel this and try to buy another one. There it goes. Okay, so the call actually did too. So I'm actually going to pause this again so that way I can buy the do the stop on the call. So you can see now that the put is actually profiting. So you see the mark, which is what the option is trading at right now, is 67.92, which has gone up from our original 64.87.5 and above what our trade price is. So that's why we're at the profit. Now our call, I'm going to set a stop also. Right click on it, go to sell order, go to stop, and whatever it's trading at now, which is 67.77, we're going to change that to 67.50 and see if we can get stopped out. 67.50, which is below what it's trading at right now. So both the call and the put sides we're doing below the trade price. It's always going to be below the trade price. Sending that and go back to the chart. We have two stop orders now. Now, as this goes down, we should get stopped out on our call. And I'm actually going to keep this side open, because once this hits 67.50, we stop out, and once this hits 64.50, we should stop out. So I'm going to start this back up and let it run for a little bit. And this one is actually going to take us a second to catch up, because we are going down in price. So here we go, 67.77. It's going back up a little bit. Oops, sorry about that. Okay, here we go. Now it's caught up. So now we're looking at 67.50 for this one to stop out, and we're looking at 64.50 for this one to stop out. Now I'm going to wait for the call to stop out, because I know it drops here in a bit. And then once that stops out, then I'm going to fast forward this a little bit, because it takes a little while before the put side will drop out. Actually, we can fast forward it just a touch. We're actually fast forwarding this 3 times the speed that is. We're playing at 3 times the speed that it's supposed to be going at. And this actually might stop out. Let's see what it's at. So we're at 64 and 68. So yeah, we're quite a bit away. So we're going to go ahead and fast forward again. And this price will the price is actually going to drop a bit, and then it'll end up taking off. And so that's the reason why I picked this specific spot. So let's go back to the trade price. And once it starts going down, this price here will start going down. Hopefully it'll hit below 67.50 and stop out. This is one of the reasons why, there it goes. So that one just sold. Sorry, the call side sold. Now we're waiting on the put side. Sorry. Okay, so now what we're going to do is, so this one stopped out. So once it dropped below that 66.50, then that's when it sold. So now I'm going to fast forward this a little bit, because it's going to take a little while before, I think it's at 53 or something like that is when the price starts going up. So I'm going to do 50, and then I'm going to fast forward it a bit. So we're going 3 times the speed again. So now it's going to go up. So we'll watch our trade price, and we're looking at 64.50 is when we're supposed to stop out. Now, I also want you to pay attention that when it's going, the price is going up right now. So we're looking at 50, there it goes. And then it's, see, as soon as it went to 64.50, it stopped out. So we stopped out on both of those at a loss, but that was to be expected. All right, so that's the way you set stop limits or stop orders. It's the same thing with trailing stop orders. Even no matter what side you're doing, whether it's the call or the put, it's always below whatever price the mark is, because the mark is what the trade price is for your option. So even though the put is the underlying is going down for the put in order for you to profit, or down up for you to lose money, you still want to make sure that your trail stop, your trailing stop loss, and your regular stop loss are always below whatever the mark is. So for my trailing stop losses, I start out at a negative 5%, and then I tighten that up to a 4%, and then eventually a 3% as the option makes more and more money. So it's always a negative. Even on a put side, you will set it at a negative number. So I hope that helps and answers your question. And I hope I didn't make it more confusing for you. But like I do requests. So if you have any requests for videos, just a comment and I will get to